WPAY is coming up on a really interesting moment. As of October 27th, almost 60% of the single stock ETFs inside this fund, things like AAPW for Apple, AMZW for Amazon, and so on, are tied to companies that are all reporting their third quarter earnings this week. Now that's a big deal, because WPAY isn't just holding one company, it's a fund of funds, meaning it spreads your investment across 15 different names, all of them running a 1.2x leveraged weekly strategy. WPAY has started to recover after that recent pullback, the one sparked by Trump's proposed tariffs on China. And now, heading into earnings week, investors are watching closely. If these big tech names come out and beat expectations, that momentum could easily give WPAY another leg up. But if we see disappointments across the board, the ETF could just as easily give back those gains. That's the trade-off with a fund like this. You're tied directly to the performance of some of the most volatile, headline-driven companies in the market. In this breakdown, I'll go over what investors are expecting, what could move the needle either way, and how I'm personally looking at the setup from a balanced point of view. Berkshire Hathaway reports first on October 28th, pre-market. Earnings are expected to come in flat, about $3.50 per share and roughly $92 billion in revenue. That's not necessarily bad news. Berkshire isn't a company that beats or misses in the same way tech companies do. It's more about stability. The focus here will be on insurance margins and, of course, the performance of its massive investment portfolio, especially the Apple stake. Berkshire's exposure to Apple alone moves the needle. The beat probability is high, around 80%. Expect no fireworks, just steady execution as usual. MicroStrategy reports later that same day after the close. This one's a completely different story. They're expected to post a small loss of 15 cents per share on $120 million in revenue, up 5% year over year. But that doesn't matter much. What investors really care about here is Bitcoin, and their performance moves almost in lockstep with crypto prices. The stock is volatile because of that. If Bitcoin stays above $70,000, sentiment should stay positive, but this is not a fundamentals-driven story. It's pure crypto leverage at this point. Then we have Apple reporting on October 29th before the bell. The company is expected to post $1.57 earnings per share, up 10%, and $94 billion in revenue, up about 5%. What matters most here is services growth, AI integration, and how iPhone sales are holding up in China. Last quarter, they surprised to the upside by 14 cents per share. Analysts are mostly optimistic heading into this one, 75% chance of a beat. Amazon also reports on the 29th same morning. Expect $1.26 earnings per share, up 25%, and $158 billion in revenue, up 10%. The focus here is clear: AWS cloud growth, margins, and ad revenue. AWS is still the crown jewel, expected to grow about 15%. Advertising is another huge tailwind that doesn't get enough attention. If they deliver strong numbers here, I think Amazon could lead the rally for the entire Mag 7 group this week. Beat probability is very high, around 85%. Next up is Microsoft, reporting October 30th pre-market. They're looking for $3.17 in EPS, up 8%, and $70 billion in revenue, up 13%. The key driver continues to be Azure AI, which is expected to grow roughly 28%. Every earnings season, Microsoft is the company that proves AI isn't hype. It's already producing real, measurable growth. Beat probability is 90%. This remains the strongest, most dependable business in big tech right now. Google reports that same day. Expect $2.28 per share earnings, up 18%, on $88 billion in revenue, up 12%. Cloud and YouTube are the highlights. Cloud is growing around 30%, and YouTube ad revenue has been rebounding nicely. There's some noise from antitrust headlines, but investors will be watching for progress in AI-driven search. If they deliver solid cloud growth, we could see a 5 to 10% pop in the stock. Beat probability around 80%. Coinbase reports October 30th, pre-market. This one's always a roller coaster. Expected $1.68 EPS, up an incredible 150%, and $1.3 billion in revenue, up 20%. Meta reports October 31st pre-market. Expect $5.07 EPS, up 30%, and $41.5 billion in revenue, up 15%. Ad revenue continues to recover, efficiency gains are paying off, and the company's back to focusing on profitability after years of metaverse spending. They're firing on all cylinders right now. The only drag will likely be Reality Labs' losses, but the market knows how to look past that. Beat probability is high at 75%. Finally, Palantir reports October 31st after the close. They're guiding for $0.09 per share, up 28%, and $701 million in revenue, up 27%. The stock's been priced for perfection lately, trading at nearly 200 times earnings, so expectations are sky high. The focus will be on commercial AI deals and whether that growth is sustainable without sacrificing margins. Beat probability is medium at 55%, but this one could easily swing 10 to 15% in either direction. WPAY's short-term outlook is all about earnings momentum and macro sensitivity. If the majority of its top holdings beat expectations, we could easily see a 5 to 10% upside in the ETF price. But the leverage cuts both ways. A few key misses, or weakness, could send it lower just as quickly. The next monthly rebalance on November 1st might introduce 4 new tickers, expanding beyond the traditional Mag 7 concentration. If the tech and crypto rally continues, with AI adoption rising and Bitcoin possibly heading toward $150,000, this week could be pivotal for WPAY. Personally, I think this fund could be heading into the high 50s, purely based on the analyst expectations and price targets for the companies reporting earnings. But, of course, only time will tell. As for me, I'm taking a balanced approach. I'll be allocating 50% of what I plan to invest now, and then the other 50% after earnings. That way, I'm positioned if we get strong results, but still protected if there's a short-term pullback. It's all about managing risk while staying in the game. If you found any value in this breakdown, make sure to like, subscribe, and turn on notifications, and drop a comment below. What's your allocation to WPAY right now? Are you buying more or waiting until after these companies report? I'd love to hear your take.